Welcome to It's the Economy. In the past month, geopolitics has become a more important factor for corporate boardrooms and financial markets than probably it has ever been. Most corporates are not designing capex plans, not deciding what product they would make and where they would make, because tariffs would depend on what they make and where they make. Geopolitics has become so important. So today I have with me a guest who can perhaps help us understand how the current geopolitical turmoil will pan out into geoeconomics and what may be its endgame. I have with me Lord Mark Sedwill. He is the Geopolitical Advisory for Rothschild Company. He has in the past been UK Cabinet Secretary. He has been National Security Advisor for the United Kingdom and has served in diplomatic positions in several countries in Asia and the Middle East. Lord Sedwill, thank you very much for sparing time.
Thank you so much for giving me the opportunity. Very good to be here.
Well, so let me start at for an Indian audience. You know, this entire US-China war, in India, people try to look at the optimistic angle by saying that we are probably going to be beneficiaries because production may partly shift to India, or in a Cold War between US and China, US may lean in favor of India. Are these fair assumptions?
Yes, I think they are. I think there are opportunities for India. And I think one of the things that is not well appreciated, actually perhaps in Beijing or Washington, is that the world is not actually going to coalesce into a sort of blue team and a red team, one around the United States and one around China. Many countries, and India probably most prominent among them, have a strong tradition of non-alignment. Now, it's a different non-alignment to during the Cold War, but India, Indonesia, Brazil, Saudi Arabia, South Africa, indeed many European countries are determined to have a positive relationship with China and a positive relationship with the United States and not be forced into a choice between the two. And as you say, there is an opportunity for India, partly because the Chinese economy is not booming to the same extent it was before. Labor costs are rising there. The population is actually now declining. It's a fast aging population. So there are natural economic reasons for production to move offshore from China to the ASEAN nations, to India. But of course, there are political reasons as well because of this tension between the US and China. And so I think India has very real opportunities in the decade ahead.
But would some of these be taken away because China could come with reprisals against those who are seen being favored by the United States? They even seem to have threatened some countries. The old African proverb, when elephants fight, what happens to the grass? Could there also be negative if one leaned in any fashion?
I think that's right, which is why I made the point about non-alignment. I mean, people use fancy new terms for it, but fundamentally it's the same phenomenon. So India has always had that tradition, and so I don't see India and other countries taking the position they're taking as essentially putting at risk some kind of retaliation, because India isn't going to align 100% with the United States and it isn't going to align 100% with China. Of course, there are risks in this. Both sides might try to put pressure on other countries essentially to do that. But India's a big economy. India's going to be the third largest economy in the world within the next decade or so. And so India's too important a country to essentially have to buckle to that kind of pressure. And let's not forget, it's many Chinese companies themselves that are actually offshoring production into ASEAN and into India. It isn't simply Western and Indian and other businesses doing that, but Chinese businesses themselves are doing it just for economic reasons, because they want to find places where there's a big consumer market and indeed where labor costs are lower.
No, they're already approaching India for those reasons, and it is India which is being wary because we have had border skirmishes
indeed
quite recently.
Yeah, indeed.
Now, coming back to China's trump cards, if I may call it that, they do have a very dominant position in heavy rare earths and heavy rare earth magnets. Can they really drive a very hard bargain against the United States? Can they bring the entire EV production to a standstill?
Well, I think there are risks of that, as you say. They have, depending on which one you look at, they have a near monopoly in the production of some of those critical raw materials. And of course, they've become dominant producers of batteries, dominant producers of solar. and so on. But of course, they also need markets. So they could, should tensions, political tensions between the US and China rise, that kind of risk could manifest itself, whether sanctions from the US or essentially China choking off production. But the United States needs this Chinese production. China needs markets. And one of the things that is wholly different to the US-Soviet relationship during the Cold War, and I think we still must refer to it as the Cold War and not the first Cold War. We're not yet in a second Cold War, and let's hope we can avoid that, is that the economic relationship between the US and China is so much deeper than it was between the United States and the Soviet bloc. And there are strong incentives on both to avoid tensions getting out of hand because of the economic damage, as well as the security risk, but because of the economic damage that would be done to both countries.
No, you put your finger on it. The difference between the US-USSR conflict and the US-China conflict is that US and USSR were unconnected subsets, whereas US and China are completely entangled sets.
Exactly.
And therefore messy. So what may be the end game? Will it be just that a part of the Chinese production comes back to the US, or reality changes just a bit, or will it be very drastic? What does the end game look like at this juncture?
I think it's difficult to say. I mean, clearly, the tensions between the two have been rising for some time, and one of the very few issues on which there is a bipartisan consensus in Washington is that China is now this strategic rival to the United States, and I think they've realized that there are economic vulnerabilities. I chaired a panel for the G7 countries back in 2021 where we looked at exactly this question of economic resilience, and we realized that point you made about the Chinese monopoly in the production and refining of critical raw materials was and is and remains a vulnerability. They've invested in it, the rest of us haven't. And we need to create much more diversification if globalization is going to continue. So there are some scenarios in which things deteriorate very sharply, particularly if there were a crisis around Taiwan, for example. There are scenarios where they reach a new equilibrium, where essentially their economies disentangle in some of the high-tech, defense, most sensitive areas, but the bulk trade continues, and that happens in a sort of normal and evolutionary way, where some of that production moves to India or to Vietnam or other countries, some of that production continues. And I think what's in everyone's interests, India's interests, Britain's interests, and actually America and Chinese interests, is that they manage their way through this so that there is a flaw to the deterioration in their relationship, but it doesn't get out of hand.
That seems to be the best case that you are drawing up. Okay, what's the worst case? Before you come to the worst case, in your scenario, is a Chinese attack on Taiwan or even usurping Taiwan a possibility?
It's clearly a possibility in that the president of China, President Xi Jinping, has told his forces to be ready for military action in Taiwan by the end of this decade. That doesn't mean it will happen, but clearly they have that in mind, and they've always threatened military action were Taiwan to declare full independence from China. So that remains a risk, and clearly remains the point of tension that is most dangerous between the United States and China, because it's the one that could bring them into direct confrontation with each other. One of the things I take some heart from is that despite all of the tensions and conflicts around the world, the US and China haven't really come into direct confrontation with each other so far, and both governments seem determined to try to avoid that happening. They have a highly competitive, highly rivalrous relationship, but neither wants it to get out of hand. So there are clearly risks that it could. Taiwan is probably the most acute risk, but notwithstanding the pressures, notwithstanding the punitive tariffs that the Trump administration has imposed, there remains a relationship, and they remain determined to avoid that relationship deteriorating to the point of confrontation.
Well, I'm going to ask you a directly economics question.
Please.
Do you expect that there is going to be disinflation because a lot of Asian countries will have, slack extra output, and which they will try to, push around within Asia, therefore disinflation? Or can it be inflationary because everyone erects barriers against Chinese goods, or because of supply chain dislocations? What's the more likely scenario?
I think inflation is the more likely scenario globally. But of course, the point you make is there could be pockets of disinflation, or actually quite big zones of disinflation for the reasons you say, as supply is diverted. But the inflationary pressures are quite strong. First, as we learnt during COVID, completely globalized supply chains can create monopolies. By the way, the one we've talked about of critical raw materials is not the only one. There are other monopolies in other parts of the supply chains, including in some quite everyday goods. And as countries seek to create greater economic resilience, onshore, reshore, nearshore, etc., that inevitably, and optimize for resilience, not just cost, that creates an inflationary pressure. Tariffs and protectionism create an inflationary pressure, and we appear to be moving into a protectionist period between the United States and the EU as much as between the United States and China. And of course, the same goes for the US-India relationship. So that's inflationary as well. And big deficits are also inflationary because they drive up inflation and thus interest rates. And so the factors, the up arrows, if you like, overall I think outweigh the down arrows, and that we are probably in a period of structurally higher inflation than we have been really since the financial crisis. But of course there may be zones of the world, there may be countries where the numbers go in the other direction.
I don't think central bankers are prepared for this. At least in Asia, we are talking more about disinflation. This can be a nasty surprise. Exactly. Let me come to the other part of the global theater where there's war. The US, the Russian Ukrainian conflict. We don't have time to discuss a lot of the intricate questions, but how may the end game be? Will it be like the old Poland and Hungary, which were like kind of colonies of, with only friendly governments of the old USSR? Or will it be like Afghanistan, where the armed conflict goes on and then, Russia retreats at some point? How is this ending?
Well, very difficult to say how it will end, but I think in the immediate future, it seems now that the impetus to try to stop the fighting, create a ceasefire, and then some kind of an arrangement around that, details highly controversial and still being hammered out, that feels as though that is the likely next phase. The truth is the war itself is pretty much at a stalemate, and neither the Russians have been able to make much territorial progress, and the Ukrainians haven't been able to expel them from their territory. And so some kind of ceasefire deal looks likely. That will probably mean the conflict stabilizing along, broadly speaking, the current lines, with Russia in occupation of significant parts of Ukraine. For Ukraine and for certainly Western governments, they will not concede sovereignty, Russian sovereignty over the areas they occupy. They will regard that as occupied land. And of course, we have many other conflicts around the world where there is land that is occupied, sometimes for a very long time, sometimes for many decades, yet the conflict itself has stabilized. Whether that's a ceasefire line, a line of control, a green line, yet to be determined. That seems to be the likely outcome in the immediate future. Okay. And then whether there's a long-term settlement, I think, yet to be determined.
Okay. Well, finally, what about the I won't call it hegemony, the dominance of the United States and the dollar? Logically, if the United States wants a surplus with every country, we won't have enough dollars for dollar as a medium of exchange. Is a little bit of de-dollarization likely?
I think we're seeing some de-dollarization. I don't think there isn't really an alternative reserve currency out there. People sometimes speculated about it, but the renminbi isn't convertible, so that isn't even a possibility. The euro has never really achieved that status. But it does seem likely there'll be some de-dollarization. We're already seeing, for example, some oil now being sold in different currencies to the dollar. And of course, what we've also seen in the past few weeks, since Liberation Day, the day that President Trump imposed, or at least announced, he didn't actually impose, announced all of those tariffs, was the bond market became quite volatile. Yes. Not just the stock market, but the bond market. And of course, that is having an effect on the dollar's status as well. But there isn't really an alternative, I think, in the immediate future. I think a risk for the United States is they may lose some of the benefits of being the reserve currency if essentially some de-dollarization, even at the margin, starts to happen.
Lord Sedwill, thank you very much for sparing time for us in CNBC.
Thank you so much.
Well, that's the key takeaway. We have not yet understood the dangers of inflation. We are probably going to see more globalization than we are giving it credit. Probably a large part of globalization will be preserved, and we can't do without the dollar. There isn't much de-dollarization. Those are the key takeaways. Thanks so much for watching. It's The Economy. After a break, time for Chartbusters.